The year was fantastic. When I talked to you guys in June, I was optimistic that we would see a good second half, and my expectations were exceeded, in fact. Both for the bank overall and for innovation banking in particular, we've had a very strong finish to the year, and it looks like a good build to the book for next year.
Well, tell us a little bit more about that. Give us some color or give us some insight into exactly what you're seeing and what kind of deals are we talking about?
Well, we're talking across the whole scale, which is a little bit different. What we had not seen before was earlier stage companies in the innovation sector going out and successfully raising money. The spigot has now turned back on. We started to see that late Q3, and into Q4, we had any number of companies tap the market, and even more are teed up to tap the market as we go into the new year. Part of it was the reopening of the IPO market, and by extension, as was just discussed on your show, the M&A market has really come back as well. So there's additional sources of liquidity in the market that we had not seen. That gets people who are funders of these businesses more optimistic as to what the future will be, what the exits will look like, and hence willing to make bets today.
A lot of ways to fund these businesses. There's equity investment, there's venture debt, which I know you certainly specialize in. Which one will take a front seat in 2026?
Well, it's always led by the equity side, and that's both private and public equity. When we're talking about IPOs, that's public equity. But what the function of venture debt is to be able to extend early stage companies' cash runways so that they can accomplish milestones or traction with clients to prove out that their solution does indeed work. And you can imagine what the valuation leap is when they are able to do that.
And they don't have to give up any equity to do that.
They give up far less equity.
Way far less. Don't they not give up any equity if it's venture debt?
They do give a little bit, depending on the situation. Okay. On the earliest stages, they'll provide warrant coverage on the transaction. It gives a little bit of upside to the lender, but compared to equity, much less dilutive.
But are you ever doing deals in venture debt where you're just loaning money and you're not actually getting an equity stake?
That tends to be for later stage companies, okay. Growth type companies. So there's a continuum. It starts with the very earliest stage. You do see equity attachments to almost all the deals. And as the company progresses through its development chain, there'll be less equity, more debt focus.
Hey, Bob, what kind of companies, though? Is it all AI related? Is it bioscience, biotechnology? Give me an idea of the kind of deals that are coming across your desk.
I would say AI is a backbone, or AI is now being attached to everything that comes across anyone's desk. And so you have to dig in and understand what the level of AI is. In many cases, it's machine learning or just plain automation. So everyone's putting the AI tag on everything. But that is the constant backbone or the consistent backbone that we see. And it's now being applied to a whole lot of businesses. For example, in our medical and life sciences groups, we're seeing the use of AI much accelerating in that area. We're also seeing it in energy. What had been clean tech is now becoming energy tech.
What does that mean?
So
is it just a name change?
Like, what does that mean?
No, I think it's a focus from just focusing on clean energy, for example, to how do we get more sources of energy at a more compelling price. And so it's really a transition. In terms of AI, what it's doing is transitioning the software, what had been the software business, into an AI business, but it's really going after the applications business. So how do we solve a specific company's problem today? What's the ROI on that? And that's where we're seeing applied AI really make some gains.
Bob, I want to go back to something you said, though, about deals coming across the desk. And you said everybody's attaching AI and you've really got to kind of go through stuff. That makes me a little nervous because that reminds me of the .com, where everybody threw .com on, and said they had an internet strategy and everybody didn't. So is there a lot of that coming through or no?
I would say everything has a consistent backbone or a consistent theme of AI. And what you have to look at is what is the comparative differential that they provide and how long lasting is that differential going to last. And as a result, what we're doing is focusing on those sectors where there's a more immediate ROI for the ultimate enterprise client.